Good morning, one and all, to DeFi Crypto and Airdrops and DeFi University, DeFi High Show. We are going live 9 a.m. Pacific, noon Eastern, Monday through Friday. And we are going through David over at DeFi University and DeFi High. We're going through the free course that he put together, lesson by lesson. Just the whole thing, we're going through, we're picking it apart, we're explaining it, wherever we feel like that there, needs some explaining to be done. And just going to go through that. And then we're also going to be going through the DeFi University, just to make sure that we walk you through the whole process. So right now, we've been, the last lesson that we did was going over wallets. What do you got for us today, David?
Yeah, I just want to start things off here, Mike. Whenever you see an imitator, sometimes imitation is the most sincere form of flattery.
If you ever see sometimes it's just like getting spit in the face.
Oh man, like if you see an imitation DeFi University, that's not the real deal. That's it's like if you go to the store and you want to buy some milk and they've got fake milk on the shelf, don't buy the fake milk.
Don't buy almond milk.
Don't buy.
There's no teats on an almond. You can't milk an almond.
There's no look. So let's hop in here and let's take a look. So today, Mike, I think that we're going to do. We're still wrapping up crypto fundamentals. So just by the way, for everyone, I did finish publishing the rest of the DeFi high school courses. So after we wrap up crypto fundamentals, I think today we're going to go through lesson 11 and lesson 12. I published Staying Safe in Crypto. So this is the next course that we're going to go through in crypto and DeFi high school. And then I also published Your First Steps in Crypto. So these are all published. And then the last one here is Intro to DeFi. So we're going to finish up here, I think, with crypto fundamentals. And then we've got 3 more courses in the DeFi high school: Staying Safe in Crypto, First Crypto Steps, and Intro to DeFi, before we get into DeFi University, which is Beginner DeFi Concepts, Investor Mindset 101, Money Markets 101, Perpetual Futures 101. So those are the 5 courses in DeFi University. And in DeFi High School, we've got Money Basics, Crypto Fundamentals, Staying Safe in Crypto, First Crypto Steps, and Intro to DeFi. So we're going to go through these last couple lessons in crypto fundamentals. Mike, didn't we leave off, I think, on lesson 11?
Yes.
Private keys. Yeah, private keys and seed phrases.
We were talking about it. Instead of wallets, they should call it, like a crypto keychain, because that's basically what it is. Because your crypto's on the, the liquidity, the value is on the ledger. It's on the chain. It's not in your wallet. It's just, the only thing in your wallet is the key that gives you permission, to control that liquidity.
Exactly right. And let's go ahead and hop in here. We're going to take a look at the master key. So let's go ahead and hit play.
All right, let's talk about this.
Oh, whoops. I need to be able to hear this. So I'm going to go ahead and just make sure that the sound is being output to my headphones. There we go. Let's hop in.
Single most important concept in crypto security. Seriously, it all boils down to one thing. Something that's simple enough to write on a piece of paper, but powerful enough to protect or lose your entire portfolio. Let's get right into it. Okay, just imagine for a second. What if you had one single key that unlocked your front door, started your car, and opened up your safe at the bank? A true master key for everything. Kind of convenient, right? But just think about the sheer panic if you lost that one key.
Well, that's not just some thought experiment in the crypto world. That key is very, very real, and it has a name. It's called a seed phrase. Understanding what this is and what it represents is the absolute line between keeping your assets safe and losing everything.
So when we call this thing the master key, what are we really talking about? It's not just a clever tool. It's a complete shift in how we think about ownership and responsibility. A shift that puts all of the power and all of the risk right on your shoulders.
Yeah, so Mike, we've been talking about this a lot, going through these first couple of courses here in DeFi High School. We've been talking a lot, man, about, personal responsibility and, how when you custody your own assets, there's no tech support line to call. All the responsibility is on your shoulders, but what you get with that responsibility is true sovereignty.
Mhm.
So yeah, man, it can feel scary sometimes, especially at first, because you don't have anyone there to support you. It's just you. So that's why you've got to go through the education. You got to learn about this stuff before you really start deploying serious money into your life in DeFi.
Yeah, the convenience is off the charts, but the danger is just as extreme. If someone else gets their hands on this key, they get access to your entire digital life. And if you lose it, you're locked out forever.
So what is it exactly? A seed phrase, or you'll also hear it called a recovery phrase, is literally just a list of 12 or 24 simple words. Words like apple, river, journey. But don't let the simplicity fool you. These words are a human-readable version of a super complex piece of data that gives you total and complete control over your crypto.
Okay, so let's dig a little deeper into what this key actually unlocks. Because it's not just one thing. It's the top of a pyramid, a whole hierarchy of control, where everything, and I mean everything, flows from this single source.
So check this out. It's like a chain reaction. Your seed phrase, those simple words, is used to mathematically generate something called a master private key. From that one master key, your wallet can create a virtually infinite number of individual private keys, and each of those keys controls a specific crypto address.
So Mike, remember I was telling you yesterday about the derivation paths and how you
Yes.
can have it says here unlimited addresses. I thought it was limited. I thought it was like on Ethereum, like 50. It might be more than that. It could even be unlimited. I don't know. That would be kind of cool to know. But you can essentially create a bunch of individual accounts with your one seed phrase. And each of those, I guess you could think of them as accounts, they would have their own separate public address. So that's really, really useful if you've got, let's say, you've got a hardware wallet, a hardware device, and you've got the one seed phrase, but you want to have multiple accounts controlled by that seed phrase, that one master private key. You want to have multiple accounts controlled by that master private key that do different things. Maybe you want one account where you just keep cash in that account. Maybe you're lending that cash on Aave, earning 3 or 4%. Maybe you've got another account where you have some fixed income products, some fixed income exposure. Maybe you're doing 15% fixed in that one account. Maybe you've got another account where you use to trade perps. You're trading perpetual futures. And maybe you've got another account where you provide some liquidity. Maybe in another account you own some precious metals, a tokenized gold, tokenized silver, stuff like that. So you can actually segregate your assets into different, you could think of them as accounts, but they're really just separate addresses, all controlled by your master private key and that one seed phrase. So,
Well, and
yeah,
you definitely want to be careful with that because, just having that one seed phrase, if that one seed phrase gets compromised, then you're compromising all of those accounts. So keep that in mind.
that's a good point, man. That's a good point. And that's why, you got to be careful with those seed phrases, man. You
No,
really do.
absolutely. That's kind of why I lean more towards, having, I have two hot wallets or, browser wallets, one that's my, risky one. One's, the
Oh,
one.
tell me about those hot wallets, Mike. What do you
Oh,
have in those hot wallets?
it's my little secret, my dirty little secret.
Uh,
And then I have of course, my one cold storage where it's the only time that is, touched is, that's my safety deposit box. That's not connected to protocols. I don't connect that to anything other than to send crypto to, an exchange, either, reputable, centralized one or a reputable decentralized one. How you use EtherFi and things like that. basically places to onboard or offboard, my liquidity.
Absolutely, man. So something that we all need to think about is, how do we safely store our seed phrases? That is something that I've really struggled with, actually. It's not easy because, let's say you create a new account and you use a hardware wallet, you create that new account, that new wallet, and you write down that seed phrase. Okay, so you've got it on a piece of paper now. But if you want to make sure that it stays safe, maybe you stamp it into a piece of titanium. Okay, great. Now you've got it stamped into a piece of titanium. What do you do with it from there? And what happens if you lose it? So maybe you make a copy of that seed phrase. Now you've got 2 copies of the seed phrase, the master key to be able to spend your assets. Where do you put them? Do you put them in a safety deposit box? I don't think so. I certainly wouldn't do that. Do you, what do you do with it?
Out of my prison wallet. Those that play Arc Raiders know what I'm talking about.
There you go, man. Look, it's not easy to figure out where to safely store these things. Another thing that you could do, and this is maybe getting a little bit more advanced than DeFi High School, is you could create a multi-sig from the one seed phrase. And so you would essentially be breaking up the ability to sign transactions into multiple keys, multiple signatures. And you could store those keys in different locations if you wanted to. So I'm sure that we'll get into that at a later date. Let's continue on with this video.
The bottom line is this: if you control the seed phrase, you control everything, every transaction, every asset, forever.
All right, because this key is so unbelievably powerful, the rules for protecting it aren't suggestions. They're not best practices. They are absolute, ironclad, non-negotiable error. Let's be crystal clear on the things you must never, ever do. First, you never share these words with anyone, ever. No legitimate support person will ever ask for them. If they do, they are a scammer. End of story. Second,
that was a really important point. And we've hammered home this point many, many times over the last couple of weeks here. But, it bears repeating again. If anyone ever asks you for your seed phrase, that person is a scammer, full stop.
Unless it's me, of course.
What's that, Mike?
I said, unless it's me, of course. If it's me, it's totally legit.
Right.
Totally.
Of course. Of course.
Just looking out for it.
Oh, exactly. Here, look, I can definitely help you with all your technical support stuff. I just need your seed phrase first.
Just need your seed phrase, and I got you covered.
This next one, though, I think this is about not storing it online. And some people, dude, I've worked with so many clients, and
you mean I shouldn't have it in my Google Drive?
No, don't do that. Don't do that, man. It's not a good idea.
To a website. And third, you absolutely, under no circumstances, store it digitally. No taking a photo of it, no saving it in your Notes app, no emailing it to yourself. That's like leaving the master key to your entire life sitting on a park bench.
How did he know what I did?
I know, right?
What's the right way to do it? It's surprisingly low tech, but it's effective. You have to write it down on something physical. Paper is the absolute minimum. A lot of people etch it into a piece of steel so it can survive a fire or a flood. Then you store that physical copy somewhere incredibly safe. Think a personal safe or a safe deposit box. And finally, you should really think about making more than one copy and keeping them in different, secure locations. And what happens if you don't follow these rules? If something goes wrong? Well, the consequences aren't just an inconvenience. They are final and they are permanent. And listen, this isn't just theory. The history of crypto is absolutely filled with horror stories. People who lost millions because their hard drive died and they had no backup, or people who got tricked into giving away their phrase and watched their wallets get drained in minutes. The stakes could not be higher. If your seed phrase is lost or stolen, it leads to one outcome: permanent, irreversible loss.
Okay, so that's not necessarily true. Like if you have
you still have access to the wallet.
Exactly. Yeah. So if you still have access,
if your laptop that has all of that loaded on it, all the different browser wallets, and and then you have the seed phrases in the same place, and say there's a fire, then yes, you lose access to all of it. If because you need to have that seed phrase entered into the the browser wallet or the hot wallet or something like that for you to still have access. And cold storage wallet, I don't know of any that necessarily store it. You always have to plug in that thumb drive or that that piece of hardware that has the seed phrase and the private key stored on it, and then you need a PIN number. So if you lose that, then you're kind of SOL.
Yeah, you got to make sure that you store that seed phrase very carefully. Don't lose it.
The crypto is still out there on the blockchain, but you will never, ever be able to touch it again. It's gone.
And this is maybe the hardest pill for people to swallow. There's no one to call. There's no 1-800 number for help. That little forgot password link that saves us on every other website, it doesn't exist in this world. You are completely and totally on your own. All of this brings us to the biggest mental adjustment you have to make. We've all been trained our whole lives to think about passwords a certain way. A seed phrase completely shatters all of those old rules. Look at the difference here. A regular password? Yeah, you can reset it. A seed phrase? Never. A company, like your bank or Google, has a way to get you back into your account. With a seed phrase? Nope. Only you have the copy. But this last one is the most critical distinction of all. A password just protects an account. A seed phrase essentially is the asset.
Right. The seed phrase kind of, sort of is the asset because it allows you to sign. It allows you to spend it. Without that seed, without that key, you can't sign. So the key is kind of, sort of the asset also. So, this model here on the left-hand side, where you've got your password, you can reset the thing, the centralized party that you're using, maybe it's an email account, maybe you're using Gmail, you can reset that password, they can verify your identity. But in crypto and DeFi, there is no third party. It's trustless and permissionless. So that means the onus of responsibility falls to you, the user. And if you mess up, you're SOL. So you gotta make sure that you store your seed phrases carefully.
Having the phrase is the same as having the crypto.
Right.
So let's just lock in the takeaways here. Number 1, your seed phrase is your master key. Number 2, it gives you total, absolute control. 3, protect it physically, never digitally. 4, if you lose it, it's gone for good. And number 5, the most important one, you and only you are responsible for keeping it safe.
Right. You and only you are responsible for keeping it safe. That's probably, outside of the other items here, this is like the real value of crypto because it's the custody. It's the self-custody. Like you actually own your assets. But in all of the other models, you don't actually own anything. Like if you have a bank account, you basically have an IOU, a promise from the bank, and they can kind of shred that whenever they want for whatever reason. If you are using Amazon Web Services or Google Cloud, or maybe you're using Gmail or Microsoft Azure or something like that, if they don't like your content, they can just block you. You don't actually own anything. But when it comes to crypto and DeFi, if you own your keys, you own your assets, you have real custody. But with that real custody comes real responsibility. So don't mess up. Okay? Don't mess up.
Do not mess up.
At the end of the day, it all comes down to the single powerful idea. The whole promise of crypto is that you get to be your own bank, but that power comes with an enormous responsibility. It means you also have to be your own security department. So we end right back where we started. You have the master key. You now understand its power, and you know the rules to protect it. The only question left is, what are you going to do about it?
What are you going to do about it, Mike? What are you going to do about it? I don't know.
I'm going to be very careful with my seed phrase.
There you go. You got to be very careful with the seed phrase. Let's go ahead and just run through this lesson a little bit. So the master key to all your locks, that's kind of what it is. The seed phrase is kind of like the master key to your crypto. Although it is not technically your crypto, it allows you to sign. So it basically is. It says here the benefits: one key to protect, easy to manage. I don't know. It's not necessarily easy to manage. You've got to make sure that you protect that and store it properly. And the risk is definitely that if you lose that one key, you can lose access to everything. And if someone copies it, they own your assets. They can move your assets. So you've got to be really careful. Your seed phrase, they call it a mnemonic. And the mnemonic, it's either 12 or 24 simple words. And sometimes it looks like this. So, I'm sure that we've all seen these 12 or 24 mnemonic phrases, these 12 or 24 word mnemonic phrases like apple, banana, cat, dog, elephant, frog, guitar, honey, etc., etc. This is actually kind of a cool one. I wonder if there's any assets behind this one.
Right.
Yeah.
I always wondered that if you just like kept on randomly picking, 12 or 24, different words, if you just happen upon.
Oh no,
Myke,
Mike,
upon
you
a
froze
wallet.
there. Yeah.
Oh, no. I was just saying if, what if you just randomly picked 12 words and just kept doing that? And, would you eventually happen across a wallet?
I mean, I think the likelihood of that is so low to make it like almost impossible. But what I do know is that if you have, I don't know how many it is, but I think it could be like as few as 4. If you have like 4, or maybe more than that, maybe you need more than that. But if you have like a portion of the words in a seed phrase, then I think potentially you could like figure out the other words in the phrase. Like I've heard of that. I don't know if that's real or not, but I've definitely heard of that.
They seem so random, though. I think that would be pretty unlikely. Just
Yeah.
it's like you've seen where they're like honey, apple, bridge, not car. Usually they're like 4 or 5 letter words, but you know what I mean. They're just so
Exactly.
random that it's like what are the odds? But all right. Anyway, sorry.
I think no, you're all good, man. I think that the odds are, almost impossible. Like, ridiculous odds, like, winning the Powerball times a billion type odds, something like that. So let's see here. These words are generated randomly when you create a new wallet. They encode a large random number in human readable form. So let's see here. Well, yeah, definitely. The words are easier to write down than some 256-bit number. The words are definitely easier for you to verify, and it works across languages. So that's kind of funny. I've never seen a seed phrase in Spanish.
True.
Is that a thing?
I don't know. That's actually a really good question.
Damn, I came up with a good question.
Yeah, well, no, it's like,
Yeah.
Shit, that would be like a super, if they aren't being used, that'd be a super secure, or, maybe if there ends up being, enough wallets to where, because the more wallets and the more seed phrases that are generated, the more likely it is that somebody could randomly guess one. Maybe that's the solution, is you start, doing it in, in different languages.
Right. Like put it in like Cyrillic, or
Aramaic.
Yeah, a dead language. Like
dead languages.
Oh, dude. Yeah, imagine
Egyptian hieroglyphics.
Exactly. That's a great idea, man. That is a really good idea. Your seed phrase in like grunt sounds or something. Oh, dude, but yeah, using a dead language. Yeah, that's great, man. Or make it in Greek or Latin or like, something like that.
That'd be
Really
kind of cool.
That would be super cool.
I wouldn't mind having a seed phrase in like, in actual Latin.
I mean, what if you had your seed phrase in like, pictorials like this?
in moans and squeals.
I mean, hey, it could probably work, right? I don't see
Yeah.
why wouldn't it work, So let's see how everything connects. You've got your seed phrase, which generates your master private key. which can and does derive multiple individual private keys, and each of those individual private keys generates a public key, and that public key generates a public address. So from the one seed phrase, you can potentially have dozens and dozens of individual public addresses, all controlled by the one seed phrase. It's the one seed phrase to rule them all. So yeah, just keep that in mind. You can have a lot of individual accounts from that one seed phrase. So it says here, from one seed phrase, wallets can generate millions of addresses. Oh my goodness, I didn't realize it was that many. Millions of addresses, wow. So this is why backing up your seed phrase backs up your entire wallet. Past, present, and future addresses. Pretty darn cool. Okay, so here are those security rules. Protecting your seed phrase is extremely important, and it's your responsibility. So that means never share it. That means never type it in on a website, ever. And sometimes if you're working in like the Ledger app or the Trezor suite, you can like verify your seed phrase to just make sure that seed phrase owns a particular account. Even doing that, man, I would be, that's scary, because if there's a piece of malware on your device and you just want to verify that, that seed phrase owns a particular wallet, and you type in that seed phrase on your laptop, ooh, man, that's scary to me. So just make sure that you store it properly so that you don't have to do that. Never type it on a website. Never store it digitally. Write it down physically, stamp it into a metal plate, so that it can't be destroyed by fire or flood, and store it somewhere securely. So that's really the difficult thing, is where do you store it? Where do you store your seed phrase? Because if someone gets it, remember, these digital assets are bearer instruments. So if they get your seed phrase, they can move your assets, and if they hold them, they own them. They're bearer assets. So you got to be careful where you store it. And I think it's probably a good idea to create backups. And just, you got to really think this part through, where you store it and where you store your backups if you make them. So let's see, what happens if you lose your seed phrase and your phone or wallet? Well, if you lose it and you lose the device, then it's gone. You're done, man. Done. You just went to zero. So
that's,
yeah.
Me personally, that's kind of why I make sure like I have it on my phone, I have it on my laptop that I only use for crypto. I don't use it to browse the web. I don't use it for anything else. I have a laptop that's specifically for crypto, because I don't want any malware. I don't want to, have clicked on a link or gone to a website or, whatever, and have that, laptop compromised, because they can put keyloggers on it. There's a lot of different, I don't even check my email on that laptop. So I have it on my laptop, I have it on my phone, and I have it on, and then I have the seed phrase, of course. So there's always some way to get to it. My phone is probably the, my biggest vulnerability, because, phones just aren't the same. And you're using those all the time to check emails and things like that. So again, I'm very careful with what wallets I have loaded up on my phone as well.
For sure. Yeah. I mean, look, that's something to just keep in mind, that when you're using hot wallets, they're really not secure. So you got to be careful with those hot wallets too. But,
Exactly.
yeah, man, but your seed phrase is not a password. It's really not. And so a regular password you can reset. The trusted third party stores a copy. Typing it wrong means you can try again. You can have a ridiculously weak password, like password 123, which, by the way, is one of my favorites. Or you can have a really strong password that you'll never be able to remember. And that protects your account. But that's not what a seed phrase is. A seed phrase can never be reset. No one has a copy of it except for you. Losing it can mean permanent loss. You go to zero.
Really the only way to re-secure a wallet would be to start a whole new one with a new seed phrase and move all your assets over to the other one. But if you've already been compromised, you probably lost everything. So, you definitely don't want to reuse that wallet. Let's put it that way.
Yeah, I agree with you. And let's see here, hardware and mental security. So the hardware wallet, this is definitely the best way to go. There are so many different options for hardware wallets. I've got a collection of these things now. Like, I've got ledgers and trezors and tangems. I've got a keys, whatever the hell that thing's called, a key store or a key safe, keystone. Um, let's see, what else do I have? I'm just thinking through. There's a bunch of them, man. I've got different versions of all of those, and I've got my favorites. And there are different use cases for each of them. Like the Tangem is really, really cool because it's like a credit card. And so, it's a hardware wallet credit card, but it relies on the phone app.
Yeah,
Well,
air gapping.
yeah, but it relies on that phone. Like you've got to use the app on your phone to be able to, sign transactions. So
Arculus is the same way.
yeah, I don't know how much I really trust that, although I really like the product.
Well, the seed phrase isn't stored in the app. The seed phrase is on the card and encrypted, because I use an Arculus, and that's the way it is. I hold the card to the back of the phone and it reads it, and it's air gapped. So basically, if that card is sitting in my safe, then the app is, there's no control over my assets. I mean, I can't control them. They can't control them. Somebody, if they hack my phone, they can't control them. They have to have that physical card to be able to access, because that's where the actual private keys are stored, and they can't
Right.
be, duplicated, whatever, without that physical card.
Right. Yeah, that's definitely true. For me, the challenge is what happens if that app no longer works? Like if there's some type of bug in the app, well, then you wouldn't be able to sign. And so if you
Well,
can't sign, that's a problem.
wouldn't you be able to put that seed phrase into another wallet and
Yes.
just access it that way?
Yeah, you'd have to clone it. You'd have to clone it. I've had to
Yeah,
do that before. Yeah.
I've never done it either. I know that that's an option. I know a lot
Yeah.
of people that have done that, to where, because you can put your seed phrase into another hardware device, and that seed phrase again is your permission to access that liquidity that you own on that chain. That's the beauty of it not being in the wallet. If you lose access to the wallet, the hardware wallet, or whatever, you don't necessarily lose access to your funds, as long as you have that seed phrase. You can put
Right.
that seed phrase in another wallet, and it's just basically telling the chain that this is Mike, this is David, this is whoever, and they, are authorized to access this liquidity.
Yeah, so I actually went through that process with Tangent back in 2024 when when the Solana chain went down for a couple of hours in 2024. When it came back online, they
Solana
made
never goes down.
so,
Just
so
ask any
man,
Solana holder.
oh, I know. So when it did go down, I think it was down for a couple of hours. When it came back online, I had a bunch of Sol on my Tangent. And so I opened up the Tangent app on my phone, and I
Like
didn't see
transfer,
any.
transfer.
Like I didn't see it, man. I didn't see any of my Sol, and I was wondering where the hell did it go? And what I did was I took my public address and I threw it in SolScan, and I was able to see my assets were there, but I
Yeah.
couldn't see them in the Tangent app. And the reason was I had to update the Tangent app for it to like
Mhm.
pull the new version of the chain
Yeah.
or whatever. And I didn't know that. And so I was kind of freaking out there that, hey, something happened when the chain like went down, and when it came back online, my Sol was gone. The problem was I couldn't see it in the app because I had
And
to
that's
update the app.
and that's a great selling point on being a part of a good community like DeFi University or DeFi Crypto and Airdrops. Our Discord is Ellie, that's in the chat. Her and a couple other people with their arrow locks. They deposited 2,500 or more arrow, and they were supposed to get an airdrop, and some of them couldn't see it. And so I did some research and found this out, that just because you don't see it doesn't mean it's not there. And there's some steps that you can go through, and it will, doing some updates and things like that to where then you'll be able to see it. But on chain, if you go to the Chain Explorer, you can see the NFT, but it just wasn't displaying in their wallet.
Right. Yeah, you can use stuff like DBank to just, take a look at what you've got, but DBank won't see everything all the time. Um, so yeah, let's take a look at this though. The mental security part. This is really, really important. So it's probably not a good idea to go around saying that you've got 25 or 30 Bitcoin or something like that. If you want to put a target on your back, go around and do that. Also, what Myke did the other day, talking about how he's got his seed phrase engraved into trees around his property. You
Yes.
probably don't want to do that.
Hey, you know what? If somebody's feeling froggy enough to hike around my property,
Ooh,
come on.
make
Come
my
on.
day. And you probably don't want to hint that you've got 7 figures in crypto or something like that. Now, for me, I don't really care. Like, what are you going to do? Like, bring it on. But
A lot of people are weird about that. Like I show my my wallet, or my portfolio, my DeFi portfolio, not my entire investing portfolio, but just the part that I am messing with for the channel and stuff like that. I show mine all the time. It's if you don't know my seed phrase, if I use a VPN, so I'm always changing my IP address, and I do all the safety stuff. And there's people out there that have a lot more than I have. If somebody wants to come after me, they're welcome to try.
yeah, man. So here's some of the key takeaways. Your seed phrase is the master key. It controls all of the addresses derived from it. The 12 or
DeFi Don
24
is
words.
fucking balling. He's got a 17-figure freaking portfolio going.
Bro, 17 figures. That's like
Right?
$100 million times $100 million, man.
Right?
That's a big, big number.
Right?
Big.
DeFi Don, man. Fucking, hook a brother up.
Ballin', man. Ballin'. When Lambo, DeFi Don. So, those 12 or 24 words, they're generated randomly, and that encodes that large secret number, that 256-bit number. But it's
Now,
human readable.
really quick, this is a valid point. This has happened before. If you're doing a lot of traveling abroad, or if you're even in the US or in reputable countries, if somebody can dox you and find out where you're at and you have a large portfolio, they potentially can kidnap you and do whatever to get you to give up your seed phrase or access to your funds. So
Right. So that's why I keep, a weapon in my front pocket and then a backup in my back pocket. And then when I go out, actually, you know what? I do that when I'm just walking from room to room in the house,
and then I hide a weapon in my sleeve pocket.
Yeah, man.
Because I can't put a gun in there. It doesn't allow me to put a gun in there. But
I just, I make sure that I don't put myself in shady situations. I don't want to be in a situation where there's even a possibility of some type of nonsense like that. So,
well, I need to do an episode about that, just situational awareness and kind of operational security. Not letting people. I see it a lot with crypto influencers and people like that. They're always talking about where they're traveling to and when they're traveling, and what convention they're going to and the hotel they're staying at. It's like, do you really want to be giving people that much information about your movements? Especially if you have a large crypto portfolio. I mean, you're basically giving them all the intel they need to scoop you up. You know what I mean?
yeah, man. I mean, you got to be careful. That's for sure. But
Yeah.
yeah, man, something like that, it's horrible. It's horrible that happens. You just got to, make sure that you stay up on your P's and Q's and don't put yourself in a compromising situation like that. And speaking of compromising situations, you should never share, type online, or store digitally your seed phrase. You do that, and you will lose all your money and go to zero. This part right here, the physical backup only. So paper is the bare minimum, but you've really got to stamp it into a piece of metal. So And also, don't tattoo your seed phrase on your body. Like, some
Damn
people
How did you know?
that.
I tattooed mine on my taint.
Oh, dude. Oh my God, dude. Yeah, don't do that.
Honestly, if I was gonna stamp it in metal, I'd probably put it on dog tags.
Yeah, they on Amazon there are these titanium plates, and just stamp it in, one letter at a time, and maybe do that twice so that you've got a physical backup. Because remember, loss is permanent. There's no way to recover your assets if you lose it, and unlike a password, it cannot be reset. So, like, Mike, this stuff is so important. I'm happy that we had a chance to go over it again. Now, let's take a look at lesson 12. Now that we know a little bit about wallets and private keys, or we know a little bit about private keys and seed phrases, let's take a look. Let's learn a little bit about these different types of wallets. So this should be interesting.
All right. So if you're in the crypto space at all, you've definitely heard about wallets. But man, picking the right one, it can feel like a super high stakes decision, right? Well, here's the secret. It really just boils down to one single crucial balancing act, and that's convenience versus security. So in this explainer, we're going to break all of that down and help you find your perfect balance. Let's start with an analogy that I think we can all get behind. Just think about your regular everyday cash. You've got your pocket wallet for daily spending. It's super convenient, but you wouldn't carry your life savings in it, would you? No way. That money goes somewhere way more secure, like a bank vault. Sure, it's a bit of a hassle to get to, but it's safe. Well, crypto works in pretty much the
So honestly, I wouldn't even consider money in a bank vault to be safe, like, at all.
exact same way. Crypto wallets exist on this very same spectrum. The more secure they are, the less convenient they tend to be. So the big question we're tackling here is pretty simple. How do you find that sweet spot, that perfect balance for your digital assets? Let's start at the pocket wallet end of things. We're talking about the online wallets that are all about convenience and giving you quick access for all your day-to-day crypto activities. Okay, so the very first wallet most people ever use is what's called a custodial wallet. The key word to remember here is custody. Just think of it like your account on a big crypto exchange. The company is the one that actually holds and manages your private keys for you. So even though you have a password, they're the ones who ultimately control the funds. And this is where we see the trade-off. On one hand, it is the absolute easiest way to get started. You can even recover your password if you forget it, which is nice. But the downside is huge. You are trusting a company completely. And this, right here, is where that famous crypto saying comes from. Not your keys, not your coins.
Right. Not your keys, not your coins. So if you are using Coinbase to on-ramp from US dollars fiat in your bank account to USDC, well, once you've got that USDC in your Coinbase account, you don't actually own it. Coinbase does. And so that's why, sometimes you can't send that USDC from your Coinbase account the moment that you buy it, because you don't actually own it. They're going to put limitations on that. So you got to just keep that in mind. If you don't own the keys, you don't own the coins.
So who are these really for? Well, they're perfect for beginners who are just getting their feet wet. They're also great for people who trade a lot and for anyone who just needs a simple way to get their cash in and out of crypto. Basically, they're for any amount you're comfortable letting someone else look after. Now, let's talk about the next step up in control, the hot wallet. The name really says it all. It's hot because it's software that lives on your phone or computer and it's always connected to the internet. But here's the crucial difference. It stores your private keys right there on your device. This time, you are in control. So the big advantage here is instant access. You can zip off transactions or interact with all those cool decentralized apps in just seconds. But that always online status, it's kind of a double-edged sword. It leaves you way more vulnerable to things like malware and phishing attacks, which is exactly why you probably wouldn't use one to store a ton of crypto.
Now, why does it make you more vulnerable? Well, because what we've learned about private keys so far tells us that the private keys for your hot wallet are stored in your hot wallet. And so that hot wallet is always connected to the internet. It's not a hardware device. It's not a cold wallet. It's a hot wallet, always connected to the internet. and your keys live in that hot wallet, which means you really better trust that whatever wallet you use to create that account, that they have some great security best practices, because if that wallet gets hacked or there's some type of exploit of their code in some way, you can lose everything that you've got in that hot wallet. So you've got to be really, really careful not to keep any large sum of money in a hot wallet. It is not a good idea.
Think of this as your digital spending account. It's the perfect tool for your daily crypto transactions, for exploring DeFi, and for holding smaller amounts that you need to get to quickly. Honestly, it's also a fantastic way to just learn the ropes of managing your own keys.
All right, so we've covered the digital pocket wallet. Now let's swing to the complete opposite end of the spectrum, the safe deposit box. This is where we get into maximum security with offline wallets. A cold wallet has one simple superpower. It keeps your private keys completely offline. They are never, ever exposed to the internet. This creates a physical, you could call it an air gap, between your funds and any online threat out there.
Now, you might hear some people talk about old school paper wallets, but these days, the undisputed gold standard for cold storage is the hardware wallet. It's a small, specialized device, kind of like a fancy USB stick, that's designed to do just one thing and do it perfectly: keep your crypto safe.
The security here is seriously layered. Your keys never leave the device, which makes them pretty much immune to computer viruses. And get this, you have to physically...
So I don't know that they're immune to computer viruses, because there still could be some type of exploit of the hardware device itself.
If it's
But
Bluetooth capable, if you're plugging it into a laptop or a computer, there's a physical connection. If there's a wireless connection, there's the possibility. If
right,
there's a malicious update, something says, hey, there's a very important update, click here, plug in your device and click here, and you do that, and it downloads to that device, it's now compromised.
how many times have we seen that with Ledger? Because the most important parts of their code are closed source. And, there have been so many different attacks on Ledger, and many of them have been through like updating the Ledger software.
Yeah.
So you got to be careful.
press a button on the device to approve any transaction. So what's the catch? Well, they do cost money, they're not as convenient for daily use, and of course, since it's a physical object, it can be lost or damaged.
So when do you actually need one of these? Well, this is for your savings, not your spending money. It's for long-term holding, or hodling, as they say. It's for storing significant value, and really for anyone who puts security above absolutely everything else.
Okay, so I think it's for a lot more than that, because what you can do with your hardware device is you can connect it to a non-custodial wallet, let's say like MetaMask or Rabby, and then or Phantom, or you name it, many of them. And so you can connect your hardware device to one of these non-custodial wallets, view only. So the wallet can see the assets that you own in your hardware device. And then you can connect that non-custodial wallet, let's say Rabby, you can connect that to a dApp. And then when you send signing transactions, when those signing requests are sent from the dApp, they flow through Rabby to your hardware device. You sign with the hardware device, and then you're able to operate on chain using that hardware device. So I think that the hardware devices are mandatory for operating on chain with any type of serious money. Like once you get up past even a couple $100, like you really need to start thinking about using a hardware device.
Unless you're like Don and have a 17 figure portfolio, then you might be okay with 10 or 20 grand in there.
Yeah,
This is your digital fortress.
So we've got convenience on one end, and we've got security on the other. But here's the secret that most experienced users know. You don't actually have to choose just one. In fact, the smartest approach is to build your own strategy using all three. So this really lays out the entire spectrum we've just walked through. On one end, you have the total convenience of a custodial wallet. Slap bang in the middle is the daily usefulness of a hot wallet. And at the far end, you have the fortress-like security of a hardware wallet.
So there's definitely, a place for a custodial wallet here. Some people really like the convenience of being able to on and off ramp using a centralized exchange like Coinbase. That's a custodial wallet. And hey, I don't dislike that. If you want that, totally fine. Now, the hot wallet, that would be for your spending money. You can sign on your phone. It's super convenient, super easy, but you don't keep serious cash on this. The hardware wallet, that's where you keep your savings. And maybe you have more than one. And you make sure that all of your seed phrases for those hardware wallets are stamped into steel, stamped into titanium, and stored safely. So there's a place for each of these types of accounts. It's just what's your use case? What are you looking to achieve? It really comes down to the individual.
But it's about more than just convenience. As you move from left to right on the spectrum, you're also gaining more control over your own assets. And with more control comes more personal responsibility.
Right.
With a hardware wallet, you are your own bank, which is incredibly powerful, but also a pretty serious responsibility. So what does this look like in the real world? Well, a really common and effective strategy looks something like this. Step 1. You use a custodial exchange as your on-ramp for buying, selling, and trading. Step 2. You move your spending money to a hot wallet for daily use and exploring apps. And finally, step 3. Your long-term savings get locked down in a hardware wallet for maximum security.
So the custodial wallet for buying and selling, I would say that what I would do if I were to use a custodial exchange, a custodial wallet, I would use it only for on and off ramping. That's it. I would never use it for trading unless there's some asset that only exists on a centralized exchange that I can't trade on a decentralized exchange. But the reason why I wouldn't use it for trading is usually the spreads are very wide, which means you're going to pay a lot just in slippage when you execute a trade. So I don't know that I would use it for trading. I know that there are services on a lot of these centralized exchanges that you can pay for each month that will essentially like narrow your spreads, but it's not for me. But maybe it's for other people. There's nothing wrong with that. You can absolutely use a centralized exchange to trade. It's just not for me. I prefer using decentralized exchanges to trade.
This isn't just about making life easy. It's smart risk management. You're basically compartmentalizing your assets so that a problem in one area doesn't affect the others. If you remember just one thing from all of this, let it be this golden rule. Match your level of security to the amount of value you have at stake. There's a great quote that just says it all. You don't need a $200 hardware wallet for $50 in crypto. And you definitely shouldn't keep $50,000 in a mobile app.
Right.
That right there, that's the entire philosophy in a nutshell.
Yep.
It's just common sense. So let's just quickly recap the key takeaways here. First, think of it simply. Hot wallets are for spending, cold wallets are for saving. Easy. Second, custodial wallets are the easiest on-ramp to get started. Third, always remember that fundamental trade-off between security and convenience. And finally, the pro move is to combine them all, always making sure your security matches the value you're protecting.
Right.
And that really brings us to the final and most important question. Now that you understand the landscape, the options, the trade-offs, the strategies, where on this spectrum will your personal wallet strategy land? Thanks for joining this explainer.
That's awesome. Man, what a great piece of video content. So Myke, let's take a look at this lesson a little bit here. Let's just run through some of these in the last couple of minutes that we've got. Let's take a look at some of these infographics. So types of wallets. You've got that cold and hardware wallet, cold/hardware wallet. That's for maximum security. Now, why is it maximum security? Well, because your keys live on that device and it's air gapped. It's not connected to the internet. So that's why it's maximum security. And whenever you want to spend your assets or you want to sign a transaction, you need to physically sign it on that hardware device. So that makes it maximum security. Now, maximum convenience would be a hot wallet or a software wallet. And the reason why that's maximum convenience is super easy to sign. You just click a button, boom, done. With the hardware wallet, you've got to get the thing out from wherever you store it. You've got to plug it in. You've got to enter your PIN, and then you've got to go through the rigmarole of connecting it to Rabby or connecting it to MetaMask, and then you've got to get the transaction screen up. You've got to sign the transaction. Now, if you do stuff like this every day, it's not a big deal. But if you're just getting used to it, if you're new to it, it can be a little bit more, complicated. The hot wallet, super, super easy. Maximum convenience for sure, but the keys, remember, where do the keys live? So when you create a new hot wallet, a software wallet, the keys live on that wallet. And that wallet is just a piece of software on your computer or on your phone. That means it's connected to the internet, and potentially it could be exploited by a piece of malware on your device. So you've got to just be aware of that and don't keep any serious funds on a hot wallet. So you've got this cold wallet that's offline, that's hardware. You've got a hot wallet that's online, that's software. So these are the two major types of wallets right here. Now you've also got those custodial wallets. So the custodial wallets would be like a centralized exchange wallet. So let's just see here. I want to scroll down through hot wallets. We know that those are connected to the internet and they're very convenient. We know that the cold wallets are not connected to the internet and the keys live on the device, and that makes them much more secure. So paper wallets, yeah, so this is just basically, a seed phrase on a piece of paper. That is the wallet right there.
Yeah.
So here's a little bit about a custodial wallet. So the custodial wallets, that would be something like Coinbase or Kraken or the evil Binance. They really are a bad actor, man. But custodial wallets, they hold the keys. So that means not your keys, not your crypto, not your keys, not your coins. That company can freeze your assets and you can't do anything about it. Like I've heard some horror stories about all of these exchanges, and I've been through some weird stuff with all of them too, although I've never opened a Binance account and never will. If the company is hacked, you might lose your funds. All you've got to do is ask someone who was involved with FTX, and lost money on FTX. And FTX wasn't even hacked. It was like hacked from the inside.
That was just like poorly freaking run.
Dude, yeah, it wasn't even poorly run. Like that dude, SBF, man,
It was malicious.
Straight up scammer, man. And so, this is really the problem for me with these centralized exchanges is that they're basically TradFi wearing a crypto dress. Like it's not the real deal. It's not the real thing. It's just kind of like Web 2, like dressed up in a Web 3 dress or something like that. It's not the real deal. Because the ethos to me of crypto and DeFi is self-sovereignty. That's the ethos. It is self-responsibility and self-sovereignty. And if someone else is holding your keys, then you're not sovereign. So I think that it really runs contrary to crypto's libertarian ethos, I would say. Let's see here, the security spectrum. So this is probably something that we can end on here. So, if you want free and easy setup, then you probably just want a hot wallet. This is the easiest to use. You can sign instantaneously from anywhere in the world as long as you've got internet access. You can create this on your desktop through a browser extension. You can create one on your mobile phone. These are really, really simple and easy to use, but they're always connected to the internet. So these are the lowest security types of wallets. And here we go. There's a little bit from most convenient to most secure. So Myke, I think we've run out of time here. A good call starts and ends on time. And it is 1 p.m. Eastern, man. So what are we going to talk about? Tomorrow? Tomorrow, we're going to begin staying safe in crypto. That's the next course in DeFi High School. And we're going to begin with lesson 1. Because before you really get started in crypto, you need to know all about the different common scams and attack vectors. So we're going to go through module 1 tomorrow, which is common scams. We're going to start with phishing attacks explained, And then if we've got time, we're going to go through the doubling scam. And we're going to learn about all these different attack vectors.
All right. No, it's
Cool, man.
so it looks like everybody's excited for the red pill tonight. People asking if David's going to be there. I'm sure he'll show up. He loves them spicy conversations.
Yeah,
But
I'll be there.
so that is tonight, 6 p.m. Pacific and 9 p.m. Eastern. And also here in 30 minutes, I'm going to be on the Mario Nafal show, and we're going to be talking about RWAs and DeFi stability, tokenized commodities, and stablecoins. So if you're interested in that, that's on X, and I'll probably, you can should be able to access that. I'll repost it on my X account if you're interested in that, and I'll also put it in our Discord. But hope to see you tonight on the red pill, where actually, you know what? I have some ideas. David, let me know if you have any topic ideas. I have a couple in the hopper, but I definitely wouldn't mind getting some input and seeing what you and Jeff and some other people that might show up are interested in talking about.
Yeah, man.
Yeah, we might even get Colin on there. You and Colin get pretty spicy.
Oh, dude, that'd be great. Yeah, bring him on, man. Bring him on. I'd love it. It'd be awesome.
All right. Well, I hope everybody has a great day. Until next time, Veteran Crypto out.
Peace.